the dots. And I know this is a very popular theme that you keep saying, connect the dots. So can you connect the dots from a global geopolitical issue? Take any example, whether it is the US elections or the war that is happening, and connect it to a stock's performance, any individual stock performance. Just connect those dots for me.
So I'll give you a very nice example. Okay, so whenever there's a war happens, there is an imbalance that is created. Okay, what is that imbalance? It's a demand-supply imbalance that happens in something. We don't know what that is. Let's say Russia-Ukraine war happened. First thing you need to do is go look at what is Ukraine's major export. Number one. Okay, let's say Ukraine is exporting some material. Now, automatically that material supply is going to be affected in the market. So there has to be someone else to give that material. Then you look at who are the other top players in the space who can supply to this. So you look at China, you look at India, right? Now in India, who are the players? You will automatically see this picking up. I'll give you another example. When COVID happened and China was banned from a lot of places, India became the next hub to come. So automatically you for manufacturing and mainly pharma, right? Because at that point they needed APIs to be created in India. All of them came to India and said, guys, do this. So you know what is going to happen. If I tell you about Ukraine itself, the whole Red Sea issue, ceramic companies in India started having an issue because most of the raw materials for making ceramics in India was coming from Ukraine.
Okay.
The particular material of soil. So they got affected here.
So basically during the war, Ukraine was not able to manufacture as much as it can because the focus is on the war.
Yes.
So because of that, their exports went down. They could not meet the demand that India needed.
Anyone needed. The world.
Okay.
The world, not India. So if I am exporting something as a net exporter and something happens in my country, the substitutes will come in every country, right? You find out who are the substitutes. If 80% of the substitute is China and 20% in India, that's enough. Because 20% Indian companies, now you find who are the substitutes for copper or metal or
so basically earlier, Ukraine was the cheapest supplier of this material.
Yes.
Now because Ukraine cannot send it anymore, this next cheapest supplier will have to provide it.
Correct.
So during just continue that ceramic example for me. During in the Ukraine war, Ukraine is not able to manufacture enough ceramic. So India is one of the countries which is buying ceramic from Ukraine.
It was a raw material that is used in ceramic. Some part of raw material that was used there, which used to be exported around the world, was suddenly affected. Now, because of that, the Indian guy got affected because now he had to procure it from somewhere else. The raw material cost was higher. So somebody came in as a substitute to sell.
Who is that somebody?
Some other country. I don't know. Or he didn't do it by himself for sure. So he had to get it from somewhere. So raw materials went up. Raw materials went up. The margin of that company got affected. Net profit of that company got affected. Stock price fell down.
You predicted this?
Yeah, I understood that instantly. So whenever there's a war, first thing you look at what is export. Who's
of that country's export?
Of that country.
What about Russia is also in war? No, Russia is not getting affected.
Russia is not affected at all. So when Russia did get affected, actually that was beautiful. Why? Because when the whole Russia-Ukraine war happened, a lot of sanctions came on Russia. Their currency fell down and the oil prices got affected a lot, if you remember, right?
Yeah.
When oil fluctuations happen, paints company get affected a lot in India because raw material of all paint companies are oil, petrochemicals. Right? They got affected. Then immediately Russia was smart enough. They did a tie-up with India. They did a tie-up with Saudi and started selling their oil at a cheaper rate, which India bought. But then we thought India bought, but then it was basically Reliance and all who actually bought the oil. And then they sold it to the West at a premium. So when they sold it to the West, automatically Reliance profit starts going up.
Wait. So the West did not want to buy from Russia.
They couldn't buy from Russia because of the sanctions. So they sold it to India at a cheaper rate. India obviously took it.
But India did not have the sanctions on it to buy from Russia.
Why will India have sanctions? They did cry about it. We said get lost. I'll give you another example that might happen very soon. China, Taiwan is on the brink of something happening. What is Taiwan's net exporter? What is it? Semiconductors.
Okay.
Imagine a semiconductor shortage in this world. Because if China goes and takes over Taiwan, you need substitutes, which is not there. TMSC is one of the biggest players there, right? If there's a semiconductor problem, all your auto stocks are going to go down because they can never fulfill the demand. So somebody else has to come. That is why India is so bullish on semiconductor.
That's why they're giving a lot of subsidies for manufacturing semiconductors in India.
We need it fast because the demand is too much and the supply is predominantly coming from one side, most of it. And if Taiwan gets affected, you're in a big problem.
All the auto stocks will fall.
So that's how you link everything.
So can we talk a little bit about the future? So now the US election is going on. How can I look at this from a stock market investing point of view?
I think so. I'll give you some ideas, right? So you have to understand again what is Trump favorable on. First of all, he's pro crypto. So I think that we will see definitely some movement happening. Second, knowing his relations with India and Russia, I think the war is definitely going to go down. I mean, in fact, I would say it would stop. In fact, that's already happening right now. If you see Zelensky, he's already spoken to Russia and said, let's talk about peace. Because without Biden, he's not going to get funding to continue the war. And that is going to start happening. So everything will mellow down. Everything will come back to normalcy.
But why wouldn't Trump not support Ukraine?
It's waste of money. First of all, Trump doesn't want to support...
Right now, Biden is supporting Ukraine for the war against Russia.
It's not Biden. It's the war companies behind Biden that are actually supplying arms and ammunitions. There are 2-3 big companies. Their stocks went up by 150% in the last few years. They are supplying arms to Ukraine for billions and billions of dollars. And they're also giving aid. And Russia is fighting back. So Trump has clearly come and said, if I come, this guy's not getting any money. You can do peace talks. And they will do peace talks and it'll settle down. So that is what is going to happen.
So good, no?
Very good. Because stability comes back into the market. Gold prices will start coming back to normalcy. Gold is almost at an all-time high and now it fell because of the duty change.
Correct.
But that is also happening. So a lot of, if you ask me another question about the future, what else might happen? Have you heard of this term called de-dollarization?
Yeah.
Yeah. So that is going to be, I think, might trigger the next financial meltdown. I think that would trigger one of the biggest financial meltdowns in the future.
Can you just break it down for us?
Sure. So now everything happens on the dollar. Even we hate dollar, but we're pegged to it. Everyone hates dollars because they can just print as much as they want.
How did we get to this point? Like why is the whole world dependent on the US dollars?
So a long time ago, someone made a genius decision that everything in the world would be pegged to US dollar because they are one of the most stable currencies in the world.
And we all agreed?
Everyone agreed.
Why?
Because that time they were the superpower.
Okay.
So that was that time. Russia was not that. USSR broke. Russia.
This is the 90s and 80s.
Much before that, right? So dollar was considered like the single most peg for everybody. Then the problem what happened is you keep printing money. It's a problem because you trigger inflation, hyperinflation. But if there's demand for that money, you have no problem. So that's what they're doing. World demand is there for dollars. So you keep printing, right? Now the problem is if we do de-dollarization, which is Russia.
So that is how the US can keep printing money because there is demand everywhere.
Yeah. So you keep printing money and dollar keeps going up. How is that possible? Somebody is buying that dollars, right?
Correct.
So your war is being funded in dollars.
When you mean dollar is going up, you mean the $1 is now 84 rupees. That it's keep going up.
Yes. Because the value of dollar is going up because you want to buy more and more dollars. So somebody is buying dollars from the market. So if there's a Ukraine-Russia war, it is funded by, let's say, US dollars. So Ukraine has to buy ammunitions in dollars. So you go buy in the open market and give me dollars. So you can print as much as you want and it goes up. So the beauty of this strategy, what de-dollarization is what we call it, is that the Southeast Asian countries or the Eastern countries like Russia, Russia, China, Korea, India and UAE are saying we don't want to use dollar anymore. We'll trade in local currency. We'll trade INR, rubles, AED or whatever, right? So we will go as much away from dollars as possible. Now imagine half of the world is away from dollars. What happens to your dollar? They'll implode because the debt is at an all-time high.
Yeah.
How will you pay now? So this is the strategy that you screw yourself by printing. You printed too much. Everyone knows you printed too much. So you have shot yourself in the foot. But because we are buying it, you're not getting affected. The day we stop using dollar, you are finished. You will implode. Hyperinflation kicks in.
So how do I know if a country is printing too much money? Because everybody is, finally understanding how bad inflation is.
Yeah.
Until now, inflation has always been like this hypothetical thing, right?
Yeah.
Yeah, I know the price of good is increasing,
yeah,
but I can't really see it, so who cares?
Yeah.
But in the last 1 or 2 years, we've all actually felt it happen, right?
Yeah.
The price of goods have increased.
Yeah.
And people ask, why is the price of goods increasing? It's because of this phenomenon.
Yes.
When the government is printing more money,
and
earlier if there was 100 notes in the country, divided across 100 people. Now if the government all of a sudden prints more 100 notes, the first set of people who had the 100 notes, their value becomes half.
Correct.
Because there is 2 times more supply in the entire market.
Yeah.
So that's how inflation works.
Yeah.
So how do I sort of know if a country is printing too much money?
So have you heard of this term called there's too much liquidity in the market?
Yes.
You might have heard of this, right?
Yeah.
So usually the Fed chairman, which is US Fed Powell, or if you look at our RBI, they come and give these talks once in a while, right? So they talk about inflation, they talk about money, they talk about the liquidity in the market, they talk about interest rates and all of that. So whenever too much liquidity is in the market, everyone starts spending more. Now, it's not like the government of India will take money and be like, Sharan, take this money, keep it in your pocket. No, they give it to the banks. They fund the banks with a big amount of money.
So the RBI will print and
use it to the banks. They have a mechanism where I'm giving you a simple version, right? They have a mechanism where they fund the banks to
basically they print some money and give it to the banks.
Yes. So they give it to the banks. Banks are the medium to spread it across, whether in terms of loan or whatever it is, they spread it across. Eventually it falls down. So they give more loans to companies, right? Companies will do better, right? If companies do better, they'll employ more people. If they employ more people, everyone makes more money.